net worth explode at 100K.
Growth really explodes. Net worth completely explodes after your first 100K.
As you can see, there are many and plenty of these videos, and pretty much all of them are about the same, but people keep releasing them because for some reason, the YouTube algorithm actually really loves this specific type of title. Now, I've watched a bunch of them, so you don't have to. And in this video, not only will I summarize it, I'll also try to explain and add where they haven't. So the number one is compound growth and compound interest. And it's no big mystery, but the key thing that they all mention is that it's mostly about investing and compound interest. The numbers that are frequently touted are 7% average increase year over year, up to 10%. And these numbers are based on the S&P 500, which is an index that tracks the performance of the 500 largest publicly traded companies in the US, and is also a pretty good indicator of the overall market, which is why it's commonly used. 401k and retirement plans usually also have options to invest into this as well. And the 7% year over year is from 1957, when the index was first created, to around 2017 from my memory. And the 10% number that's quoted is the more recent number that's from 1957 to present day. And theoretically, this works just the way they explain. If you plug in $10,000 from the start, you assume $500 invested per month, in 40 or so years, you'll have several $1,000,000. Now let's do quick math to see if you're getting a good return on your investment. If you take your initial $10,000 plus the $6,000 a year for 40 years, so that's $10,000 plus $240,000, you get a grand total cost of $250,000 to get you to several $1,000,000. And for these quick videos that they're doing, where you can't cover a lot of nuance or really a whole lot because they're generally less than 10 minutes long, that's why you get these simplistic viewpoints that have generally worked out in history and in the past, but it's not all that nuanced or custom tailored for your situation or for the future. Now, number two is absolute values versus percentages. If you take a penny and say increase 10,000%, you only have $1. But in reality, you'll be hard-pressed to find anything that has such a high return, and good rates of return are usually in the 5 to 20% range. And we also live in the real world, where even most cheap things start at around $1 or several dollars. So there's a baseline of how much money we actually need to survive. And to illustrate how net worth quote-unquote skyrockets, let's assume that you have $100 for your initial investment, and you can contribute $1 each month, and each year increases 10%. In 40 years, you'll have a little less than $10,000. If we're being generous, let's say you can get 20% interest, which is already on the risky side and harder to bet on in the long term, you'll still only have a little bit over $200,000. Compare this to our first example, where you'll have several $1,000,000 even at 10% interest. If at 20%, you'll have almost $59 million. These are, again, theoretical numbers, but they've worked out realistically for many people in the past till now. Though there's not a guarantee that this is going to continue forever, it does illustrate a point why net worth quote-unquote skyrockets after $100,000, where because of how compound growth works, the more money you have, the faster it can grow. And why $100,000? Probably because it's a nice round but arbitrary number that just worked out well for the YouTube algorithm. Number three is increased access to investment opportunities. Speaking generally, aside from the $100,000 number, because I don't want to tie you down to a specific net worth before something can happen, but generally speaking, the more money you have, the more access to investment opportunities you have. If you have $100, there's not all that much that you can do with it. But if you have $1,000,000, you can buy property, real estate, all sorts of things, which then you can either start a rental business and use the profits from that to buy more property, or you can buy a franchise, which is several $100,000 that can generate you more cash, or you could buy other existing businesses as well. Even if you take YouTube, for example, with more money you can invest in nicer equipment like a high quality camera, which I'm not using, a high quality microphone, and a better computer to process your videos faster. Or you can hire actual professional help and outsource tasks to them to make the overall video better. Or on an extreme scale, if you guys know who this is Mr. Beast. And while he's able to spend a lot of money and resources on his videos, which help him get those crazy amount of views. So there's always an exception with the rags to riches stories, but usually people who make more money already have had wealth to start with. Either their parents were rich or some sort of luck gave them their first lump sum of money. Now, number 4 is that you are not saddled with debt that you can't pay off. On a related note, the more money you have, the less high interest debt or non-preferable debt you have, because a lot of debt is designed to be expensive. Payday loans are the worst, where it's hundreds of percent in interest cost to you. The only real reason anyone goes to get these is because they don't have enough money and they need it urgently. Credit cards are another, which is also high interest, but usually more around the 20% range. So if you have more money, you're given the ability to make better financial choices and not be forced into worse financial choices. If you don't need a quick loan to pay your rent or feed your children, then you might choose to use that to buy an investment. Invest it in your business or into the stock market. Number 5 is behavioral changes and financial confidence. Something that comes with having a lot of money, whether that's $100,000 or an amount that's higher, I tend to believe it's an amount that's higher, is that you generally become more generous and willing to spend or invest. The less you have, the more you hold onto your money. And it's because a dollar to you generally matters a lot more than someone who has plenty of them. For example, starting a business is risky, and there's no guarantee of a steady paycheck, so instead you work a 9 to 5. But the person that is rich or has wealthy parents or a strong support network, they're much more willing to be adventurous, because if anything goes wrong, they have a fallback, either from their own money or their networks. Another example that you see with this is the stock market. Most people who trade stocks lose money, and it's a percent that's way higher than 50%. A big part of that is because most people aren't rich, and they get into stocks thinking that it's their chance to make it big. But when you don't have much money to begin with, you can't stomach seeing it go negative. Then the phenomenon happens where you sell low and buy high, because when it's high, you think it's gaining. When it's low, you're scared of losing. But if you have a lot of money, it's not going to be a matter of losing your money and then being kicked out or evicted from your apartment for not being able to pay your rent. For you, it's just Monday to you, or just another business day where you can stomach way more losses than that and keep going, because overall and eventually you're planning to make more money. So with more money, the stakes personally are a lot less for you. Number 6 is network effects and collaboration, and I'll make this one very short. Rich people want to meet other rich people because it makes them money. So if you have a lot of money, which rich people usually will have things that show that they have money in either status, clothing, accessories, you're accepted into specific clubs or groups that also like these similar things, and thus you get access to richer people and to richer wealth.